Oh, yeah.
Recorded? There it is. All right. Well, welcome everybody to Agents of Impact call number, what are we at? 46, I think, 45, I'm sorry. We are, as always, delighted to have you all. You all could be speakers on this call, and the point is really to connect you all with each other. So go ahead and start introducing yourselves, as you know, has become the tradition. And I want, as Leila said, I want to bring in Jessica Pothering, our colleague in Amsterdam, last week in Cape Town, and before that in Tanzania, meeting with folks like some of the guests on our call. And Jessica and Impact Alpha, we've done a series of these over the last couple of years. I think this may be our fifth or sixth on some combination at Jessica of what you've been covering: gender, climate, small business, digitalization. Catch us up here.
Yeah, all the themes kind of come together. Hi, everybody. Yeah, so we'll just, to David's point, back in June, I was attending a convening of the Collaborative for Frontier Finance in Tanzania, and had a chance to meet with a number of the guests on the call today. And then was just actually in Cape Town for the last couple of weeks. And I spoke to a number of the local fund managers there. And yeah, one thing I just noticed was the number of women raising their first round of funds. So, you know, these women are in the early days of fundraising and deploying capital. But one thing that really struck me is just the level of kind of creativity that they're demonstrating and thinking about how to stretch small sums of money for the benefit of women. And the other thing I noticed was that they're all doing a lot of this work together. So we published a piece about this earlier this week on Monday, and that was really kind of the basis for this call, is to pull all these threads together.
So why don't we bring everybody into the conversation, and then we'll get rolling.
Sure. Yeah. So guests today, we have Suzanne Biegel of GenderSmart. Say hi, Suzanne.
Hi, everybody. Nice to see you.
We have Lelemba Phiri of Africa Trust Group in Cape Town, well, Zambia, actually, right? Today, Zambia. Yeah.
Hi, everybody. Good to be here.
We have Raptis of Amplifica Capital in Mexico City.
Hi, everyone. Great to be here.
We have Leila Charfi of Actawa in Tunis.
Hi, everyone. Great to see you all.
And Nicole Garcia of DAI USAID Invest. And Nicole, tell us where you are.
Good morning from San Antonio, or afternoon, wherever you're calling in from.
Cool.
I just want to point out, in case it's become so commonplace, that we have Tunisia, Zambia, Amsterdam, London, San Antonio, and what did I miss?
Mexico City.
Yourself in San Francisco.
And Mexico City and California. So let's not take that for granted. I also want to say at the top that we are watching with obvious concern as this hurricane roars across Florida. So I hope everybody is safe and stays safe, and there's no shortage of these weather and other disasters this summer. So everybody should stay safe. Should we jump in, Suzanne, and set a little context? And then we'll hear from some of the fund managers. You and I have been having a little bit of a discussion. I found myself maybe being more optimistic about you about the state of gender lens, because you had titled your conference coming up, your summit coming up next month, as from traction to transformation. So I was celebrating that. You're saying maybe we need a little more transformation.
Thank you. Absolutely, David. And thank you for inviting me, all of you. And I'm so glad that Jessica is going to be with us at the summit in London in just 19 days. So the hat that I wear is I'm the co-founder of GenderSmart and also on the board of 2X, and we are about to merge. So I'm speaking with both hats. My context about thinking about investing in women fund managers and fund managers that have a gender lens and a gender and diversity lens in emerging markets is that it's a tale of two stories, as there, two cities, as there often is. So on the positive side, there are more funds, there are more creative vehicles, as you mentioned, Jessica, with creative financing approaches and really what we're, I think, all calling fit for purpose capital, that are just being much more responsive to the need of different sizes and different types of entrepreneurs in different places. And there is some money moving. And so if you think about just the amount of capital, we did my last report with Wharton Business School, which we've written about together, was only through the middle of 2021, but $6 billion had been raised by fund managers with a gender lens across the globe. And, Africa, Latin America, Southeast Asia, South Asia, North America was 40%, but, the money is really happening in different places. And we were tracking 200 funds at that point. Now I'm tracking way over 300 funds. The good news is that some of them are really raising their capital, and not just in small amounts, right? Getting to 100, 150 million.
Yep.
And then there are really creative things happening with funds that are quite small, but really innovative, doing revenue-based financing, doing creative financing for very specific kinds of, whether it's agricultural needs or climate needs or financial inclusion. And then on the flip side, they're still having such a hard time raising capital, and especially these local capital providers. And part of it is that the capital is still coming more from the developed markets towards emerging markets. It's still not coming enough from emerging markets themselves, that the local allocators and the local capital owners, the pension funds and the family offices and the foundations and all these other players aren't really stepping in yet on a local level. So it's still very much in that one direction. And there's still too much hesitancy. There's still people who are saying it's too risky, it's too far away, especially with the pandemic and everything happening economically, that people putting sort of the brakes on travel and not wanting to go and be able to do due diligence in person. Just that there's so much creativity and innovation, and these fund managers are investing in exactly the solutions that we need on climate, on healthcare, on education, whatever it might be. But there's still this hesitancy, and annoyingly, some investors saying, and I'll just say I get to be pissed off on these impact alpha calls. People saying, "Well, I'll be your last capital in. Come back to me." I know Anna's laughing, right? Come back to me after you've done a first close. And so we really still need to shift the mindsets here, and we need to shift the action, not just the rhetoric, that gets more capital moving. And there are some real leaders, Visa Foundation and, Kenny Arth and a whole host of fantastic players that have just said, I'm in, and I'm in early, and I'm committed, but not enough of them. So I'll just stop there.
So just pause on this local capital providers, which we're eager to hear from directly, but just as a new kind of pathway or channel for getting capital out. And are we talking about infiltrating the existing financial system and marching through the steps to become bigger and bigger fund managers? Or are we talking about some kind of new kind of system of moving money?
Well, I think part of what's exciting is all the groups that are raising angel capital into funds. Mm-hmm. And so angels that have done individual deals that are now pooling their capital and going into funds where the minimums have to be smaller, and then being really creative about collaborative investing. And I think about WIC Capital, who you've had on the calls in advance, but so many new things that are popping up. I think that's one. I think the other is the pension funds, and I'm looking at Scott here. I got a chance to speak on an event with him. They need to show up more at the table. So we've had Nigeria, I'm just thinking about emerging markets, Nigeria and South Africa as two of the only pension funds on the continent that have stepped in at all. And I will say the PIC, which is the one of the largest pension funds in South Africa, has made a real commitment around this, and yet still looking for larger scale, looking for more sort of existing traction. And so we just need to have them follow in the ways of the, of Illinois State Pension Fund, which has made, I think out of everybody in the US, more strides in this area of backing first-time and emerging managers. So I think it's both. I think we need to look for new places, and I think we need to really being creative about getting those actors in, and people like Scott and what he's doing with the pension fund and sovereign wealth funds is just an example of that.
Great. And then my other question, you mentioned for sort of first in or first close capital as being a need, but I think there's other kinds of money needed as well. I think we've talked about working capital, warehousing capital. Just talk about how different kinds of asset allocators can play.
So I think, so we've had a project within 2X, which is called 2X Ignite. And I think a lot of people have heard about it by now, where we did about a year and a half of research with fund managers in emerging markets to say, what do you really need? And really thinking about the combination of capacity building, the connectivity to investors and markets, but also, and talent, but also working capital, warehousing capital. So the ability to get your first couple of deals done before you've come to a first close, to demonstrate track record and also demonstrate how you work as a team and the kinds of, not only what you're investing in, but how you're investing. And then of course, the capital going into the fund, and that can also be in vehicles where it's appropriate, blended capital solutions. So thinking about first loss and thinking about guarantees and, playing different roles in a blended capital structure. And so what I'm excited about is that there are more than ever before players coming together to say, this is something we need to solve for. We need to solve for not only connecting fund managers with potential investors, but we need to look at the working capital needs. We need to look at these warehousing needs. I don't know that Lisa Thomas is on this call, but she's been working with a warehousing facility idea in Africa. But 2X Ignite is really aiming to have these different kinds of tranches. And then, of course, we need some people will be catalytic capital providers, and then other people will say, call me when it's done and dusted, then I'll be happy to look at the pipeline. And so we just need more of those people to be playing that catalytic role and to understand how important it is to be able to help these fund managers really have that working capital to have the runway, even to have the R&D money. I mean, in some cases, Global Affairs Canada is providing R&D money for funds that have a climate and gender lens, for example. And I know USAID has done some of this as well. Just that ability to experiment and try, but then to have this ability to demonstrate track record, and then obviously to connect to bigger capital.
Fantastic. Suzanne, I'm gonna ask you after we've heard from everybody to come back and tell me what the impact of all of this is. I sometimes think we've spent so much time in the last few years demonstrating the economic or the business case. I want to make sure we don't actually forget about the impact case, but actually on that, I want to shift to our guests and so stick around if you can. Jessica, you want to lead the conversation?
Yeah, I'm actually gonna, on the impact case, I think Lelemba actually has quite a cool story that she and I got to chat about last week over coffee in Cape Town. And you run, you're Lelemba, you're working on this Fund Africa Trust Group, right? I think you guys have raised $10 million, right? If I'm not mistaken. Yeah. But the story into the fund, I mean, I'll let you talk a little bit about the fund and what your sort of thesis is, but the story into the fund is cool because it is sort of telling on what the whole impact of this actually is, right? And you came into this from lessons as a female entrepreneur. Do you want to share a little bit about that?
Yeah. So I have an interesting background because I've worked in government, I've worked in large corporate. I'm also an academic, and I ended up in entrepreneurship. And this is because I really believed that there was a way to really make money and still create impact. And I just didn't feel that corporate was doing enough impact work and that government was a little bit too slow for my liking. And so I went into the entrepreneurial space, really wet behind the ears and ambitious. And we grew the company. We grew it from 1 market to 5 markets. And I think there were so many things internally as an entrepreneur that I learned joining a team of males and how much change you could create by having diversity on your team. And one simple example was just thinking about our leadership team and how that was impacting how we understood our customers. And so leading to change our whole recruitment process and, create access for women to be coming into the management process from how we're doing our, team development. moved our team from 10% female leadership to 50% female leadership. And what that did for the business was absolutely incredible in terms of just many voices into the table. And so I came with this background and getting into this space where we had become so successful that we'd get invited onto many platforms to speak about our success story. And I was quite disillusioned about how few women had actually raised money and, you know, got into the Series A, because we had raised Series A, Series B, Series C. And at that time, we had raised about over $30 million. And that was quite a story for an African business, but there was just so few of us. And I was a little disoriented about this. And so when I exited, I felt like I want to be part of the solution. And that's why I got into the space. Yeah.
You, just to go back a little, you worked for a company called Zuna, right? Which is a fintech company. And, but one of the other stories that you told me, which I thought was interesting, is about you know, as one of the few sort of women on the leadership team at the time, identified the impact that other women throughout your pipeline, right, and your value chain were having, correct?
Yes. So Zona was a fintech that worked with community agents across the several countries that we were in to provide money transfer services predominantly, and then a savings pocket. Well, one of the things that became pretty clear, and this is something that I noticed qualitatively to start with, was how much more sustainable the women agents businesses were, and that every time that they grew their business, they thought more about how do I create even more impact in my community, and hired more women. And these businesses just got more and more sustainable, particularly through some of the shocks that our African markets can go through. You know, a currency can devalue in half overnight. They were a lot more sustainable. And this was very different to the male agents. And so looking a little bit more detail into that quantitatively, it became pretty clear that the women were outperforming. And so needing to then find ways of attracting more women into our value chain, and being very deliberate about that. And so we changed our whole process about how we train, how we attract them in the first place, and just how we support them. Yeah.
You sort of took those experiences, right, and then kind of parlayed them into this, the fund that you're working for now, right, which you successfully raised $10 million. But as you told me, $10 million is not a lot when you're trying to, you know, to have maximum impact and keep the lights on, right? So you've come up with some creative ways of making that capital stretch, and also supporting other women who are coming up behind you. So maybe you can share a little bit about that.
Yeah. I think my entrepreneurial experience influenced how I've gone about raising funds, and you know, first of all, being the inspiration behind it in the first place, just seeing in the marketplace how few women were actually raising funds, and the huge drop-off actually that happens from that pre-seed and seed stage to Series A. It's like a massive drop-off. Secondly, it informed the fact that I didn't wait. You know, I didn't wait to first raise a big fund before I started creating traction. I went about it quite entrepreneurially, the whole road from my own savings to family and friends to start with, to start creating traction, to building partnerships for raising the first fund, which was a $10 million fund, you know, going the philanthropic route and making sure we could blend some of the financing so that we could offer even more cheaper capital for some of the women entrepreneurs, particularly at that very pre-seed level that require it. And so it's been about figuring out how to build the plane as we flew it. And once we had gotten to this place where we've now raised the fund and we've done some investments, it became clear again, because I always feel like I follow my pain, that looking into the ecosystem of the investors, female fund managers were struggling a lot more with raising capital. And there's data, you know, that backs this up about how comparatively it could take a man with the same background 6 months to raise a fund compared to 18 months for women, right? And so one of the big hurdles is the fact that a lot, particularly the DFIs, are so adamant about track record. And yet, like Suzanne pointed the fact, nobody wants to put down the first check. Everybody is happier when somebody else has put down the first check. And so what we started doing is, because the fund economics are very difficult to manage when your fund is less than $30 million, your typical 220 structure just doesn't work. We started working with external fund managers, other emerging fund managers that are looking to create track record, but didn't have the finance to do investments, that they become part of our pipeline builders. They support us with the due diligence process. So they create capacity for us whilst we don't have to pay for that upfront, and we pay more like a commission or a pay for results structure, but we pay them after the deal is approved. So once the deal is approved by investment committee and it gets investment, then they get a pay cut as part of the deal costs. And so this has helped us create capacity internally, but is also supporting other female fund managers to create that track record that could then help them, raise the funds.
Great, thanks, Lelemba. I'm gonna switch over to Anna in just a second, because I know she comes from this sort of institutional background, and I'm curious how that has infiltrated, with her own experience in raising a fund. But first, I just like to leave it with what would be the one thing actually that would help you at this point.
More money into female fund managers. I think it's the same. It's a reflection of what happens with entrepreneurs is what happens with female fund managers. We are overtrained and over-mentored and underfunded. And now we need the conversation to move from, we believe in this and we think there's something that can make a difference, to really just putting your money where your mouth is. So yes, actual money.
Great.
Well,
Anna, I'm going to switch to you actually, because I know you sort of see it from both sides, right? You have like the institutional background, and then and now you're in the hot seat of trying to raise your own fund. And so maybe share a little bit about your work in your prior life at the World Bank and elsewhere, and how that has influenced your thinking as a fund manager now.
Yeah, sure. But first of all, I want to say thank you very much to Lelemba for her words, because I feel like we're soul sisters here going through the same experience. I'm really looking forward to meeting you in London and swapping notes. But yeah, so, my background, I've always been very much focused on development, and now I am raising a fund, Amplifica. It's the first VC fund in Mexico focused on women. So at the World Bank, I worked in and focused on energy. I worked in the private sector on energy, very large scale projects, very much understanding that transaction costs for, deal size, large deals are the same as they are for small deals, and very, understand the economics of, so why do some of these capital allocators not willing to allocate funding to small funds? They said, I've spoken to institutions who say, look, Anna, we love what you're doing, but your fund is just too small. We only write checks that are $5 million or higher. So for first-time fund managers, it makes it really, really challenging. You're looking to develop a track record. People, typically don't want to be more than 10% of your fund. And so that can make it, a challenge for interested parties who are actually impact aligned to come in. So that's what I have seen. And it's really interesting when, starting out this journey with fundraising, people often tell you, it's family and friends. It wasn't really that wasn't my case. And, I think for emerging managers, everyone's group of family and friends looks very different, right? And it's been very interesting for me to see who's been successful in raising capital quickly. And it's typically people who do come from, networks where they've got friends with very deep pockets or family with very deep pockets. Not everyone has that. And so when we're thinking about, what kind of fund managers do we want to, develop in the regions, if we're going to have, the most innovation and creativity, we need people that look differently and come from different kind of backgrounds. So I think that is a real challenge. And I think additionally, another challenge we have in Mexico is that for some people, Mexico is too developed. There'll be some capital providers who say, yeah, we don't do Mexico because it's part of the OECD, and others say Mexico is too risky. So finding those investors that are have some kind of affinity for Mexico and Latin America, is a real challenge in there when they're looking at what impact they want to have with their investment dollars. And I think going back to Suzanne's point about institutional investors, local institutional investors, in the US, the ERISA legislation had a very big impact in, allowing VC financing, and that there hasn't been something similar in Mexico and other parts of Latin America to really encourage pension funds to be investing locally. They haven't been doing that, and they're definitely not going to be investing in first-time fund managers. So you have that. That challenge in terms of the people who have the ability to take on risk, the larger family offices and institutions, they are the less likely to want to take on those risks to invest in a first-time fund manager. And so the answer that I get is the same what Suzanne and Lelemba mentioned is, sounds great what you're doing, come back to us when you're doing fund 2 or 3, because we don't invest in first-time fund managers. So I think it requires a huge amount of intentionality of, okay, what do we want our impact to be? Do we want to create a more diverse ecosystem where we have more women participating, to allow capital to flow to women and diverse fund managers? Let me just
pause on that, because I think that's a really important point, and it sort of gets to my question about what kind of system is being created here. Because is the goal to get to fund 2 and 3 and raise enough money, make the fund economics work better? Obviously, that's makes things easier at some level, but it sounds like part of the magic and the impact comes from being a first time and even smaller fund manager, able to get the right kind of capital to the right kind of businesses at the right stage that you may not be able to do once you're quote unquote successful. So is there some kind of new mechanism that needs to actually support you in what you're doing now?
Well, I mean, I would definitely say that, getting access to capital easier. I mean, if you look at the reality of in emerging markets, to raise a fund larger than 10 million for a first-time fund manager is really, really challenging. And institutional investors or development banks will usually not invest in funds that are less than, smaller than 15 million. So there's this gap there where you've got a lot of people, starting out looking to raise funds that may be $2, $5, $10 million, but the access to capital is really, really challenging in that space. But at the same time, as Lelemba mentioned, people are building and learning and developing as they're going. So, it's not necessarily appropriate to put the same institutional capital requirements, all the same kind of level of reporting and auditing. Small funds just can't accommodate those requirements because you have a lot smaller teams and the management fees can't pay for that. And if you want to put that all into the fund costs, well, then the fund returns are going to be awful because you're paying all this extra admin that you need to meet the requirements of these institutional investors. So I think that there could be new products, new financing mechanisms that can really support first-time fund managers. And I see a lot of that happening in the private sector in the US. What you see is successful GPs, successful funds investing in, purposely investing in first-time fund managers, understanding that first-time fund managers, they won't have, the same, audit system set up or reporting requirements, but they're fine with that because they want to take on that risk to support the development of first-time fund managers. Whereas, in the development finance institutions, and I see a lot of head scratching about, how do we get this capital to first-time fund managers? And as Lelemba said, it's just write the check, understand what the risk profile is, understand that, yes, some fund managers are going to do really well and some won't. But when you put that across an investment portfolio, you can turn out having some very good results.
Anna, have you found local investors who sort of get your mission and are willing to put in a little bit of early capital? Where have you been?
100%. No,
Okay.
So 70% of my investors are local investors in Mexico. So I have a mix of individuals. I have a couple of corporate investors. And I have one Mexican institutional investor, and all of those investors have all invested because of the mission, because of the purpose that we are the first VC fund in Mexico focused on women. We have, women making the investment decisions. So it's because of our very clear gender focus. We invest where there are either women leaders or so women founders or goods and services focused on women. So very clear, and that's the reason they're investing. I mean, obviously they're expecting to get financial returns as well, but the reason why they're investing in this fund and not some other fund is because of what our mission and focus is.
Great, thanks. What you were saying about the local fund managers is something that will sound familiar to both Leila and Lelemba, who were in this convening in Dar es Salaam, but where we actually heard many of the fund managers there who were talking about their experiences raising for the first few years, just kind of moving on from the DFI community. I think the original hope when they launched their funds was that the money was going to be coming from DFIs more easily, and they haven't, after several years of fundraising, they've had almost no success with tapping DFI capital, and have moved on to, and are bootstrapping and pulling, scraping funds together from local investors, and in turn, actually, that's helping build more local willingness, and helping educate institutional investors locally in what it means to invest in alternative assets, like, like the types of funds that you guys are raising. And Leila, I'm going to turn over to you because you're actually sort of in the earliest stage of this journey, and I'll let you summarize sort of what's happening in Tunisia and what Actawa's mission is. But you guys have figured out a creative way to pull together some partnerships to get your fund off the ground, right? So why don't you say a little bit about that?
Yes, thanks, Jessica. Yes, so we are still in the early stage processes of setting up the fund, of fundraising. So we are two female founders, first-time fund managers. In Tunisia, we are raising a $10 million seed fund in Tunisia to back scalable startups positively impacting women and youth. So we have been working on this for the past year now. We are still fundraising. So I have to say that probably in Tunisia, we share similar environment as probably in the rest of Africa in terms of lack of funding for startups, lack of investment for early stage startups. It's even worse for women-led startups. In Tunisia, I have to say, we even have less investment opportunities for startups. So we are here to provide a solution. We are here to create a new seed fund. There are less than 5 seed funds in Tunisia right now. So first of all, we are here to enrich the offering for startups in general, and we are here to support startups having impact on women. So it's either we are following the 2X challenge methodology. So it's either women founders, or for startups having impact on women managers, or women in the workforce, or women beneficiaries. So our fundraising experience has been, I have to say, we had, as you mentioned, Jessica, we had a first win We have a strategic partnership with INP, Investisseurs Partenaires. They are a French impact investor supporting and investing in African funds, in first-time fund managers. So we reached out to them. North Africa wasn't part of their focus, but we shared the same vision. So they were very eager to support female-led fund in North Africa. So here we are. Now we secured this partnership with them. We are very excited, and hopefully it's going to open the door to local fundraising. It's funny, in Tunisia we have traditional investors, so they don't want to invest in startups. They don't want to invest in seed funds. So by bringing an international partner with the scale of INP, now I think it's going to open doors for us to influence local investors to invest into seed funds and in women in a gender focused fund.
Let me ask you a question, but it's actually really for everybody, which is how, at one level, how has the broader global macroeconomic climate affected fundraising, and are people pulling back, and particularly in emerging markets or in your markets? And then more broadly, whether there's a gender lens clearly, but do other things rank positively or negatively in terms of fundraising around SMEs, around climate lens, around any other themes that may be sort of intersecting here, and what has worked as sort of a focus in terms of being able to grab the opportunity? But
so actually, yes, the economic situation, and I would say the political and economic situation in Tunisia and in the region discouraged foreign investment. Yes, we see that. We can feel that. It's a real issue. So we are trying to cope with that. We are trying to show that we still have innovation coming out of our emerging countries. So emerging countries have a lot of young entrepreneurs creating innovative startups that are going international. So at the same time, so maybe the traditional sector is suffering more from lack of investment, but we see that there is a trend towards, for example, African startups, African innovation. There's a lot of skills, tech skills. So on the other hand, we are seeing more interest. We are seeing more investment from DFIs, but not necessarily into first-time fund managers. So DFIs are putting more and more money into investment for like second, third funds, into gender lens initiatives, more on the technical support side. So we are seeing more and more incubators, accelerators, supporting women founders, young founders, but we still lack investment for very early stage startups. So it's at the same time, it's when we look at the economic situation, when we look at the youth and gender gaps, they are still huge. In Tunisia, for example, we talk about 25% unemployment rate for women, which is twice as high as for men. Women entrepreneurs, they are only 11%. I think we see similar numbers in other emerging countries, but at the same time, we see a lot of opportunities. For example, in Tunisia, 67% of graduates are women. So the talent is there. The competencies are there. Women are resilient, they are innovative, they are creative. So with the efforts of initiatives like Impact Alpha, like 2X Challenge, I think we are changing the culture of investment, and we are showing the potential to invest in women. Hopefully, as fund managers, we are trying to attract more and more investment into that space.
Thank you. Thank you so much. Well, the themes are emerging, Jessica. I mean, you know, first-time fund managers, obviously, but the need for sort of new products and mechanisms and ways. It's a good time to bring you in, Nicole, and tell us about some solutions to these obstacles that you've heard, I'm sure you've heard many times.
Yes, they were definitely resonating from many of our partners and a lot of the work that we've done. So just a bit of context on USAID Invest. It is, as the name suggests, a USAID funded mechanism that's really designed to help USAID partner with the private sector, particularly in finance and investment. And so we're a 7-year initiative. So most of the work that we do, we really try and ensure that there are impacts that are much longer term than our quick project and quick life of the initiative. So that really is the focus. We being funded.
How many years into the 7? How many years into the 7?
We're 5 years, so we have 2 years left.
Okay.
Yep. And we do, being funded by USAID, we do have the flexibility of that capital to be able to provide catalytic capital, both in the shape of first loss capital for some of the funds that we work with, as well as to provide much needed working capital. I think when we initially started working with in a lot of different investment funds, this includes those that have a gender lens, as well as those that are more focused on SMEs and may not have that gender lens. But we we did focus a lot on first loss capital, but then started to see and hear from our partners that what was more useful was providing some of that working capital, especially for funds that are smaller in their target size. So we do work with funds that are as small as about 3 million and then go all the way up to 100 million. So there's quite a big range, but the assistance that we provide really does look to help them either kickstart, so identify some pipeline, develop some of those first policies as they look to make investments in emerging markets, as well as even design funding for some of the funds that I see some of our partners on the call. So like the Kiva Invest in Women Fund, we provided design funding so that they could go out, meet with investors, investees, and gender experts in the space so that they can design their fund and develop the strategy, the impact framework. And we do really have that broad global focus across the entire globe, but in countries where USAID does have presence. So we also help to, we do tend to work with funds that are providing some of those creative solutions that have been mentioned, like revenue-based financing, with Linnea Capital in South Africa, as well as more of that fit for purpose debt financing to businesses that are typically overlooked by venture capital and private equity investing models, like the Beacon Fund in South and Southeast Asia.
So let me just pause there, because one of the other things we heard is the hashtag is, just write the check. So first question is, what do you see out there in terms of folks, new folks maybe, who are willing to just write the check, and any changes in whatever that risk profile is? As you say, you can see the sort of effect of different levers you might pull, whether it's first loss or something else. And then secondly, how willing is USAID to invest, or USAID more generally to just write the check?
Yeah, so for USAID, we do provide support around the investment funds, but as USAID can't be an investor, so there is some nuance around the support that we can provide. We have seen with our partners, and we actually have a good chunk of partners that signed, right before the pandemic, and then we have some that have started their work in the midst of it. So we have seen quite a difference, of course, in the investment environment, as it's been much harder for them to tap the sources of private capital that they thought were going to be available to them, which extended to some of those commercial investors and included much more than just DFIs. But I think even with the DFIs, we've also seen that there has been a bit of hesitance, especially as the fund size is a bit smaller. They tend to be much more willing to go towards those larger fund sizes. I think one of the interesting things we've seen across Invest is that USAID can help play a supportive role, where then the DFC or another DFI can come in and invest in the fund. So we do try and build the steps so that they are able to get that investment, but we have seen that same hesitance. We've seen investment come in smaller amounts, and also, but I think hopefully, and something that points to a good sign is some of that has come from local investors, and so not just the international investors.
Right, right.
Do you have an example of that, actually, Nicole, of one of some of the work that you guys have done that have actually ushered in some of the DFI capital?
Yeah, absolutely. So we partnered early on with Women's World Banking for their Capital Partners Fund, the second one that they did. So this is a well established and was a second fund. I think on the first time and female-led fund managers, we've also worked with WIC Capital in Senegal, and so have helped to kind of provide them. And I think that's where we've seen some of that local investors aligning more with the work that they've done there.
Why don't we bring everybody back in and mix it up now? Because I still am a little bit fixed on this notion of, it seems like what we actually want and what some of these programs are doing is spawning lots of new fund managers, or at least that's what one of the goals would be, to invest in more first-time fund managers, and we'd have lots of examples like the folks on this call. Presumably they would all then be competing for the same big checks, and I don't quite understand how this is going to work unless people can get supported as relatively small fund managers and make that work as a proposition unto itself. So I'm sort of grasping at, like, what is the system that we want to be creating here, and what would be the mechanisms to get there?
So David, I'd love to talk about that for a minute. So one of the things is we need to understand that there are different funds who are tackling different challenges with different theses, different capital sizes that they need to take in and that they want to deploy. So I think it's helping people understand the clustering. Right. And then thinking we need a system which is, who's going to be there with the catalytic money, who's going to be there with the next step money, who's going to be there with the next step, who can't come in on the fund that's raising 10, but could come in once they're raising a second fund that's maybe 50, and have everybody really understand what their lanes are, what they can do with the kind of capital that they have to work with, but then also to think beyond, just to say, like, could you stretch to say, yeah, this was my lane, this has been my lane, but I could go a little bit further, I could take another step. And for those that have said, oh, we could never do that, there are plenty of examples where people said, I could never do that. And then lo and behold, they were able to do it. And so I think helping people understand, well, what is this fund? Where does it fit in the system? But then where is this capital provision coming from, and who can play what role? And the intermediaries have a role to play in that. The people who are really helping do the fundraising, but helping, make these connections. But I think it's also the capital providers being honest about, what can they do, or where could they stretch, and having some imagination. And then thinking about new actors that aren't in the system. I had a meeting with a big corporate yesterday, I can't say who it was, talking about how they could use they're already doing some pretty extraordinary things with backing first-time fund managers, talking about how they could use all of the different tools, from treasury to their venture capital arm, to their corporate social innovation arm, to their foundation side, just all of those different tools in different creative ways. And I think one thing that we haven't really talked about is there's, hundreds of billions of dollars on corporate balance sheets. And so how do we start to unlock that? And then Scott and I talked about the fact that, for a sovereign wealth fund or a government pension fund, they're supposed to have a long-term view. They're supposed to be thinking about the market, where it's going, and how do they really have a development impact, in addition to and a social obligation, in addition to a financial returns profile. And so thinking about those people that can think a little bit longer term and say, if I don't back this fund at fund 1, they're not going to get to fund 3 and 4. And how do I help build that? And then the last thing is, sometimes we got to lead with climate, or lead with healthcare, or lead with supply chain innovation, and not lead with gender and diversity, but really lead with a thematic, and then have gender be part of that, but recognize that sometimes people have a sleeve for climate, or they have a sleeve for supply chain innovation more than they have a sleeve for investing in a gender fund.
Yeah, interesting. Scott, I do want to pick up on that, but we also have Hannah Schiff here, I think, from Developing World Markets. Hannah, are you with us? You got to.
She's got to be unmuted.
Oh, there we go. Yes,
There we go.
thank you.
And you've been working with our friends, and I know Suzanne's friends at Criterion on looking at your own investments and coming up with some nuanced takeaways, I think.
Yeah, thank you so much for giving us the opportunity to share for just a couple of minutes. Developing World Markets, we're an emerging markets fund manager, and we invest private equity and private debt. And we've always had sort of a gender focus in terms of the majority of our end clients being women, but we're trying to expand the ways that gender lens shows up to take a more holistic view. And one of the ways that we've been doing that with Criterion is through 8 companies in our private equity portfolio, really working on the business processes that those portfolio companies have, and they're kind of in their day-to-day. How are they looking at power dynamics that are gendered? How are they looking at biases? And so instead of just starting with kind of like that output of number of women clients, thinking through it from a process and practice angle. And so, I wanted to bring in here, and it reminded me Lelemba's experience with women agents at Zuna. There's also the business value angle of it. And so thinking through, when you do that kind of work and you're getting into the details of how the processes are working and incorporating gender, what kinds of positive business outcomes come out of it. So I'll just stop there to say that we've launched a public version of some of the results and recommendations. It's really kind of the start of this journey, because then we want to implement those recommendations with the portfolio companies. And so I'll just drop the link into the chat, and would love to hear what others on the call think of that as well.
Great. And let's bring Scott, if you're willing to say a few things. I mean, this is sort of the other end of the scale here. You've been looking at all the biggest sort of asset allocators, and have some experience at the sovereign wealth fund level and how can the money start flowing from the top? Oh, Isaac, you got to unmute Scott.
Hi, everybody, and it's thank you for unmuting me and letting me participate, and thanks for letting me just join I think what's a great forum. So yeah, look, we're trying to hold large institutional investors to account on their gender investing programs. And what we've started initially is creating what we call the Responsible Asset Allocators Gender Diversity Index. So what we're doing is tracking how these large institutions, pension funds, and or sovereign funds, what they're doing on gender diversity. So we're going to be.
Let me just, because in the interest of time, just sort of cut to the chase. Does it also get down to some of the obstacles that are identified here, like for investing in first-time fund managers or needing a track record? Because it could be not exactly a gender consideration, but it has the effect of excluding these first-time fund managers.
Yeah, well, so just very quickly, what I would say is that, we found that we looked at 250 asset allocators, it's 26 trillion of AUM, and only 30% of them are prioritizing gender diversity. So and only 18% of them are actually sort of getting actively engaged. So there's still a lot of work to do. Unless you prioritize it and move forward with your programs, it's just a lot of lip service. So that's one thing. In terms of actually sort of investing in first-time funds, you know, I think that's a losing argument. Instead of trying to convince them to do something that may not be allowed by their bylaws or their contracts. I mean, they're legally limited in many instances. And that applies to any kind of first-time fund, not just women's, but men's or anything. Instead, what you want to try to do is figure out what their constraints are and then see how you can come up with a solution. And then there'll be, if you can de-risk the product that in a way that allows them to participate, I think you'll find that a lot of these funds will be very happy to get involved. So what the real trick is, I think Suzanne was talking about it, is how do we stretch? How do we figure out how to scale? You know, a $10 million fund is not, there's trillions of dollars. I mean, 1% of the capital of these guys is equal to 5 times the amount of money that was spent by DFIs in investing in emerging market countries for women-related jobs. I mean, the scalability here, the possibilities are really, really powerful. So what we got to do is figure out, how do we track this? That's why one of the things I put in the chat was, well, can we pull this together and scale it and then create a fund and then, you know, make it attractive by saying, yes, you'll have capacity rights to do scale in fund 2 and fund 3, and you pull it together so that now there's a possibility for them to invest capital at a reasonable level. I mean,
those are the kinds of things I think we're trying to inch towards, which I'm happy to hear that action on that. Hey, we're coming up on top of the hour. As folks know, we'll stay longer, but obviously if you have to go, you know, don't feel shy about that. But we'll keep the conversation going. And maybe, Jessica, should we give everybody a chance to sort of share some takeaways and even calls to action? I mean, there's this giant chasm between the 1%, which is 5 times all the DFI funding on the one hand, and folks having trouble raising on the other hand. And what I really want to maybe take you back to it for the closing remarks is the impact. Who on the ground, what companies, what solutions, what founders need to get funded to be able to bring their solutions to market, and if all of what we're inventing here actually plays out. So I don't know who wants to jump in first.
Maybe Leila, Anna, and Lelemba, if you guys have thoughts on that, we'd love to hear from you first.
Sure.
Yeah,
I mean,
sure.
That's what
Go
I like
ahead,
to see.
Yeah, fight for the mic.
go ahead.
So I hope that one day we won't be talking about gender lens investing. I mean, I hope one day we will be just talking about investment that will create value, that will create economic development. And I think we have, luckily we have the numbers to show that women entrepreneurs are highly performant. Investing in women generates a wider development impact than just it generates financial return, it generates economic development, it generates social impact. So I hope that traditional investors will understand that if they want to talk numbers, the numbers are here. The financial return is going to be here by investing in women. So I hope that one day this is going to be just a history talking, and we will be, we will find equality and women. We will see like success stories of women leaders who are, doing great and elevating the economic and social issues and finding the right solutions. Yeah.
Following up on that 100%, but one of the additional things that we want to see, we're investing in women in the tech space, and every day we see the lack of participation of women, and believe that drives outcomes. So bringing in women as investors to direct capital to a more inclusive financial system where we have the voice, the views, the visions, and the needs of women incorporated, we believe we'll have better outcomes for everyone in society. And that's just not happening today. So we need a lot of intentionality and a lot of push to move to a lot more equitable, inclusive society that will drive better outcomes in terms of climate, technology, data, security, cyber crimes, across the board. So, and I can see that we're aligned here and look forward to working with you all to achieve that goal.
Yeah. I back both sentiments, and I'd like to add that I think that we actually need to make development finance a lot more accountable. I don't think it's good enough to just say that constitutions don't account for it. The constitutions are written by people, right? And that there needs to be a lot more accountability about what does development actually look like. And development is two-pronged. It's both top-down and there's also bottom-up. And they can see, they're fully aware how development is massively driven by the SMEs and by the startups in any economy. And so just choosing to ignore a whole asset class, I think, is actually unacceptable. And so if it's a conversation about not understanding the asset class, then let's have more conversations. I think a lot of the family offices might have started in the same position, but took steps forward, and we're just not seeing that same level of commitment. And so maybe I'll throw it back to Impact Alpha the next time we're having these conversations here. Please bring them into the conversation so that we can actually speak to the people who are in the forefront of the investment committees. And so we get to understand and take steps forward towards each other to really see what are the big hurdles and what do we need to get better at on both sides. It just can't be us, compromising and trying to push. And there's actually no accountability on the other side. Development finance is supposed to be for development.
Yeah.
Lelemba, we'll take you up on that. It's something has come up on many of these calls. We've never quite gotten to the bottom of it. We've pressed and challenged, but risk profiles of supposed development finance institutions seems to be a recurring topic.
Can I throw in two more things? One is that I think we need more partnerships. We need, corporates together with banks, together with development finance actors, different constellations of players coming together. And there's some beautiful examples of that have happened already that we shine the light on at our summit and in other places. I do also want to say that in terms of impact, not only everything that everybody else said about solving the problems that we need to solve as a society and taking advantage of the opportunities that are out there, but building women's wealth. So building the wealth of women fund managers, building the wealth of women entrepreneurs, so that they can turn around and then invest in the next generation. And I think that is something that if we can unlock the power of women's wealth, I think that's the also massively untapped thing. That also means getting the wealth managers involved and those who help advise on that money. But I just think that's another piece of the impact. A plug for our summit. It is an invitation only summit, but we have a little bit more space. It's really geared. Our mission is to really influence the investors. And so our focus is on allocators, on asset owners and allocators who can move capital so that we can really help them to do more, to invest in a way that is gender smart, gender and Jedi smart, justice, equity, diversity, and inclusion, to really think about not only these barriers, but we've been talking about, but really understand the barriers that they're also facing to deploy capital in a different way. So if you know anybody that should be in the room that has a real intentionality around gender smart investing that is deploying capital, please let me know. It's 19 days away, but otherwise we will report back after the fact, and I'm glad Jessica's going to be there with us.
Yeah. And then if I can just piggyback on what Suzanne was saying about it taking a lot of different types of actors. I think we've seen that across Invest. And so I would just encourage those on the call, regardless of your role, the organization and type of organization that you represent, to start. It sounds like you're already asking the question, but to start encouraging others also to ask those questions. And there are so many tools and resources out there for other organizations to figure out how do we start incorporating some gender lenses or GenderSmart strategies into the organizations that we work in. And so just as we start to do that across organizations and investors, investees, I think we'll start to see some increased impact and hopefully work towards those gender equality goals.
There's some questions going on in the chat, which I was happy to see other people are starting to answer. So that's good. But basically, advice to first-time female fund managers in the missing middle stage between the first million and 10 to 15 million who are facing challenges raising, what key criteria of the portfolio or partnerships makes raising successful. So that's the broad question of how to help new fund managers get going. Young Bo, you also have had your hand up as always. So
yes, it's good that some of the panelists have already addressed some of these questions, especially on the sovereign wealth and other sides. So to consolidate all of that, first is, so far, have you seen much of any movement such that, let's say, if a smaller, more entrepreneurial allocator jumps in, say a family office who's particularly entrepreneurial, like, have you seen much of a likelihood that many of the bigger funds, especially the pension sovereign wealth funds, are going to follow that, just based on discussions with colleagues, what they've reported from their dealings with sovereign wealth, especially, is they're amongst the most risk-averse investors you're going to find anywhere, that it's either going to be only after everyone else, or it's just going to be something that it's really justify what they would have already justified, especially if you're in the Middle East or South Asia, those areas. So have you seen that type of a cascading type dynamic, if you could get the first few allocators in? And secondly, and I've seen this as a big issue, is that the habit is so many are just lumping these EMs and LMICs even at the country level, because there's so much variation at the country level, as in Mexico, for example. It makes a big difference whether you're talking about Mexico City, south of Mexico, the northern border areas, individual states. So is it a matter of just lack of capacity there, just general lack of knowledge, perception gaps? Just some more insight on that would be very helpful. Probably Anna and anyone else like to jump in.
The two questions are I think reaching big institutional investors and I guess dealing with the particularities of country risk and other things, political risk.
Yeah, just take a more granular approach to that.
And one thing that we heard in other contexts a lot is now currency risk. I don't know whether that focuses or whether there's solutions for that, but that's a very particular thing that is an obstacle that also can be solved at a sort of system level with various kinds of guarantees and other mechanisms. That may be something to just pick off as a particular solution.
I mean, if I think about somebody like and again, it's a larger fund, LFA IDF, they really brought in capital from such a variety of sources. They had individuals, they had families, they had the Nigerian pension fund, they had DGGF, and then FinDev Canada came in with, I don't know, 7.5 million. And then they brought in, a couple of other financiers. Ultimately, EIB, European Investment Bank, came in. And so they raised over 100, but it took way longer than it should have. And it was a painful process. I think it's, if they were on the call, I think they would share that. But I think, having family offices and having those visionary entrepreneurial people with, who have the real business background, really get behind it, plays multiple roles. It's a signaling. It's also the, being on the board and helping with real support. It's opening up other doors to other families. It plays a huge role.
we've had Alethea on calls and Impact Alpha. And one of the things that's always interesting is when something becomes an example, but then it's for a long time, it's the only example, right? Or it's one of very few examples. So
Yeah.
so the question is, what's the template in some way, like you're saying?
Right.
Other closing thoughts anybody wants to share, and we can also let folks go on to the rest of their days or evenings as your time zone, in your time zone. Jessica, you have some takeaways here, some calls to action?
I mean, I just messaged Lelemba and said that I will totally take her up on her assignment and homework for us to get to, you know, to get the development finance sort of risk profiles kind of on the spectrum a little bit more. I mean, I feel like those conversations are out there, and it's just a stagnation. I mean, when I was in Dar es Salaam, you know, I actually heard some say that, you know, come back in a couple of years, you know, you're too early for us, we can't write. And it's like, there's not even kind of an entry point, it feels like, for that conversation in some ways. And so, and the other thing that, that I've noticed, and Leila touched on this a bit, is that, it's almost like first-time women fund managers have to do everything. Like, you have to solve climate change and create all kinds of jobs and support SMEs and be inclusive of women and youth. And, you know, and I think actually Leila, it was your business partner who even said, oh, what do we also have to invest in women in space? And so, you know, I think I liked the, you know, the comment you made, Suzanne, about, what is it that investors, you know, actually the boxes that investors actually need you to tick, and maybe that is a climate lens, or maybe that is a small business lens, and layering gender in, because as we all know, gender fits into every part of this picture. So yeah.
I want to thank everybody for joining us today, in particular our speakers, and particularly for you, Jessica, for pulling us all together. And then I do want to point out Suzanne, a special shout out, and I pointed people to the link to the Agents of Impact profile, but particularly thank you for all you've done for the field, but also for Impact Alpha over the years, in keeping us connected with everybody, and best of luck at this summit that will take some of these ideas forward. So from all of us to all of you, see you next time. Thanks.
Thanks, everybody.
Thanks,
David and
everyone.
Jessica.
Thanks. Look forward to seeing you,
Thank
Suzanne.
you.